Have you ever wondered why some people seem to get approved for almost everything? The best credit cards, the lowest mortgage rates, the best auto loan offers, the highest credit limits, while others get rejected again and again, even when they have a stable job and decent income. The difference often comes down to one powerful number: your credit score. And here's the truth that most people don't realize until it's too late. Your credit score can either open doors for you or quietly close opportunities before you even know they existed. A strong credit score can save you thousands of dollars over your lifetime. It can help you qualify for better loans, lower interest rates, premium credit cards, and financial opportunities that many people never get access to. But if your credit score is poor, everything becomes more expensive. You pay more interest, you face more restrictions, and in many cases, you work harder just to get the same opportunities that others receive with ease. That's why in today's video, I'm going to show you exactly how credit scores work, what really affects them, and the smartest strategies you can use to build an excellent credit score faster. Because once you understand the system, you can start making it work for you instead of against you. Welcome back to Smart Card Europe. Let's dive in. Before we talk about improving your credit score, you first need to understand why it matters so much. Many people think a credit score is just a number that banks look at, but it's much more than that. Your credit score is essentially your financial reputation. It's a reflection of how responsibly you've managed credit in the past and how likely you are to repay borrowed money in the future. Banks use it, credit card companies use it, mortgage lenders use it, auto finance companies use it, landlords use it, and in some cases, even employers may review aspects of your credit history. Every time someone evaluates your financial trustworthiness, your credit profile can play a role. Think about that for a moment. Two people can have the same income, the same job, the same age, the same lifestyle. Yet one person receives better offers, lower rates, and easier approvals simply because they have a stronger credit profile. That's the power of good credit. And that's why learning how to improve it can be one of the most valuable financial decisions you'll ever make. Now let's talk about how your credit score is actually calculated. Most credit scoring models are built around 5 major factors. Once you understand these 5 factors, you'll understand exactly where your score comes from and what actions can help improve it. The first and most important factor is payment history. This makes up approximately 35% of your credit score. In other words, it carries more weight than any other category. Why? Because lenders care about one thing above all else. Do you pay your bills on time? If someone lends you money, they want confidence that they'll get it back. Every on-time payment builds trust. Every missed payment damages trust. It's really that simple. Your payment history includes credit cards, personal loans, auto loans, mortgages, and other financial obligations. A single late payment may not destroy your credit score overnight, but repeated late payments can have a serious impact that lasts for years. That's why one of the most powerful habits you can develop is paying every bill on time. Not most of the time, not when it's convenient, every single time. If you're looking for the fastest path toward excellent credit, start there. The second factor is credit utilization. This accounts for approximately 30% of your credit score. And surprisingly, many people overlook it. Credit utilization measures how much of your available credit you're currently using. For example, if you have a credit card limit of $10,000 and you're carrying a balance of $5,000, your utilization rate is 50%. To lenders, high utilization can signal financial stress. It suggests that you're relying heavily on borrowed money. On the other hand, low utilization demonstrates control and financial discipline. Most experts recommend keeping utilization below 30%, but if you want exceptional results, aim for less than 10%. The lower your utilization, the stronger your profile generally appears. One strategy that many financially successful people use is making multiple payments throughout the month instead of waiting until the due date. This helps keep reported balances low and can positively impact your score. The third factor is the length of your credit history. This contributes roughly 15% of your score. Lenders like to see experience. The longer you've successfully managed credit, the more confidence they have in your ability to continue doing so. This category looks at several things: the age of your oldest account, the age of your newest account, and the average age of all your accounts combined. This is why many experts advise against closing older credit cards unnecessarily. Even if you don't use an older card frequently, its history can continue helping your credit profile. Time is one of the few factors you can't accelerate, but the earlier you begin building healthy credit habits, the more powerful this category becomes. The fourth factor is credit mix. This makes up about 10% of your score. Credit mix refers to the different types of credit accounts you manage. Examples include credit cards, mortgages, auto loans, and installment loans. A healthy mix demonstrates that you can successfully manage different forms of credit. However, it's important not to borrow money simply to improve this category. Never take on unnecessary debt chasing a few extra credit score points. Good financial decisions should always come before score optimization. The final factor is new credit. This also accounts for approximately 10% of your score. Whenever you apply for a new credit card or loan, a hard inquiry may appear on your credit report. One or two inquiries usually aren't a major issue, but multiple inquiries in a short period can make lenders nervous. It may appear that you're urgently seeking access to credit. That's why it's important to be strategic when applying for new accounts. Only apply when there's a clear reason to do so. Now that you understand the 5 major factors, let's focus on practical strategies that can help you improve your score. The first strategy is simple, but incredibly powerful. Never miss a payment. Set reminders. Use automatic payments. Create calendar alerts. Do whatever works best for you, because consistency matters. The second strategy is keeping your utilization low. If possible, keep it below 10%. This single habit can have a surprisingly positive impact over time. The third strategy is reviewing your credit reports regularly. Mistakes happen, fraud happens, incorrect information happens, and sometimes those errors can significantly lower your score. The sooner you identify a problem, the sooner you can fix it. The fourth strategy is protecting your oldest accounts. Length of history matters, and preserving older accounts can help strengthen your overall profile. The fifth strategy is avoiding unnecessary applications. Remember, every hard inquiry leaves a footprint. Be selective. Apply with purpose, not emotion. The sixth strategy is thinking long-term. Many people become obsessed with quick fixes and overnight results, but strong credit isn't built through shortcuts. It's built through patience, consistency, and discipline, month after month, year after year. And finally, understand this. A great credit score is not just about impressing banks. It's about creating options. It's about having choices. It's about gaining access to opportunities when you need them most. Because life is unpredictable. At some point, you may want to buy a home, start a business, finance a vehicle, or secure funding for an important goal. When that moment arrives, you'll be grateful that you took the time to build strong credit before you needed it. Remember this: every payment you make, every responsible financial decision, every dollar of debt you manage wisely, and every smart choice you make today is helping build the financial future you'll live tomorrow. Your credit score is not built in a single day, but it is built every single day. So start now. Stay consistent, stay disciplined, and keep moving forward, because the financial opportunities you want tomorrow begin with the habits you build today. If you found this video helpful, make sure to subscribe to Smart Card Europe, like this video, and turn on notifications so you never miss our latest content on credit cards, personal finance, banking strategies, and financial freedom. Thank you for watching, and I'll see you in the next video.